Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold prices. Had a pretty wild week. We started the week near the lows. We got down to like 1330. We rallied them all the way up close to 1370. Then we came back down and visited 1340 again. So you can see where we're going here. We had some major price swings. Obviously, global events around, whether it's uncertainty in the Middle East, we're talking trade wars with China, we're talking issues with potential economic data here in the Fed. And we end up right around 1350, and that's going to leave us heading into the weekend with a more bullish tone than I think most thought after that sell-off we saw midweek. So heading into the weekend, I'm not saying we're uber bullish yet, but we're certainly more bullish than neutral, and certainly better off than we were a week ago. So as we look at gold right now, it's still in that comfort zone, but we're leaning towards it moving out of the comfort zone and seeing prices move higher. Now, what did the dollar do? Did the dollar help a little bit or did it hurt a little bit? Well, the dollar played a little bit of roles in both, but ultimately it's going to continue to help gold because of the fact that the dollar struggles on any upticks to make any momentum or see any momentum or maintain any momentum of strength. And, all you have to do is look no further than Washington, D.C. and some of the fiscal policies, likewise the Fed and its uncertainty about more or less how many rate hikes. Could it be 2 more? Could it be 3 more? Could it only be 1 more? And those are the issues that the dollar is dealing with. Likewise, currencies over in Asia and Europe look more attractive based on where their central banks are talking about doing, not necessarily doing yet, but talking about doing. So the dollar inherently will continue to help gold prices as long as we continue to see the dollar struggle. And lastly, let's look at its positioning. Ahead of FOMC in March, we saw speculators get out of their longs. Just after March FOMC, we saw them continue to get out of their longs, and then they scrambled to get back in. And I think at this point, we saw speculators get out at the end of last week. They got out of their longs when we kind of got near that 1350 level. And this week is going to be very much a mixed match. It'll be very interesting to see what the CFTC produces based on the fact that we've really traded the full range, but prices continue to go up. So some speculators who were short around 1350 may have gotten squeezed out on that uber pop we saw up to 1369. And if they did, maybe on the way back down, they got short again. So I think at this point, the speculators have been sort of maintaining that range. Buyers down at 1330-ish and their sellers at 1350-ish. I think that 1350-ish level is going to become a bit blurry. And you're going to see buyers on dips, but not necessarily sellers on rallies. You're going to wait and see if you're going to test those highs, get through 1370, and maybe even eyeball 1400 sometime over the next few weeks or possibly months. So speculators right now continue to drive the market, but again, that range has been set, and I think that top 1350 line may start to get a little blurry. So if you're long, I think you have a little bit of cushion here if you want to wait. If you get down around that 1330 level, you're a buyer. 1350, likely a seller, but why not wait and see if we can test those highs again? So right now, after second consecutive week of a higher close, week over week, gold heading into the weekend with a little bit of a bullish tone. This is Todd Colvin coming to you from the floor of the CME Group.